Hello, everyone. This is Matt Whitbread, and this is my midterm presentation on my will end up being my final project for the business cycle class here. So I don't have a lot of graphs or information to share just yet because I haven't really completed much of the analysis. But in terms of general framework of what I'm looking to do here, it really revolves around this relationship here that I found quite compelling. So what this is showing is year-over-year changes in industrial production, which is in orange, and then in blue, it's the year-over-year changes in the Wilshire 5000. This goes back to 1972. So these are every month year-over-year changes, and really, what I'm trying to identify here is this relationship between industrial production and equity market performance. It would seem, based upon a chart like this is a fairly consistent, although not perfect, fairly consistent relationship that actually goes back fairly long term in terms of time frame. So I actually looked back a little further on this. This goes back so from 1920 to 1960. This uses S&P 500 based on the Shiller index, and you can see again the relationship is very similar. It's not perfect, but it's very similar. And this is 61 to 2021. Again, very similar, especially in terms of some of the significant ups and downs for both industrial production as well as what's happening in the equity markets. So this relationship, it appears persistent. It appears persistent in time, and it looks like something that's very potentially exploitable from a market standpoint. And the table below here shows basically the correlations to the different lags that I use. So it would seem, based upon the data going back to 1920, that roughly 6 months of a lag results in the highest correlations. And really what this means is the fact that the equity markets tend to lead industrial production. So if industrial production is set to ramp up significantly, the equity market tends to respond to that. So it's that cyclical behavior of the two. The equity markets essentially price it forward. So what I'm hoping to do within this study is come up with a leading indicator that is able to forecast changes in industrial production at least 6 months ahead of the actual changes within industrial production. If I'm able to do that, I will have theoretically some sort of signal that I can utilize to get an understanding of where potentially the equity markets might go. So I'm hopeful it's going to work. I think at the very least, in terms of some of the data points I should be able to pull in, I think it's going to revolve around things we've certainly learned about in other classes: consumption, business spending, the inventory cycle, and so forth. But I haven't yet built it out, so I'm not quite sure what the leading index is going to look like. In terms of the model framework, at least in how I want to essentially model this out, I'm looking to build this through a multiple regression type of model, where I can bring in the leading indicator and then possibly other factors to try to really make the model robust and try to make it as explanatory as possible. So I think in one instance, I think that if I'm able to come up with an idea on the industrial production, I should say leading indicator, I think it's only going to explain a certain amount of the behavior within equities. I mean, you can just look at the chart and you can see that it hits some of the big points, and other times it completely swings and misses and it just doesn't get it right. So I have a feeling as I look into this, there's going to be other factors, maybe even some exogenous factors or just noise that's just not going to be able to be captured. But I can think of a couple ones right off the bat that are likely going to have to be added to the model, such as valuations or maybe something like the profit cycle or profit margins. So while I don't think this is going to be an all-in-one solution, I think it will be a big step in the direction in terms of getting something that's forecastable and potentially exploited within equity. So, as far as what I'm hoping the explanatory power of this model will be, I'm hoping like around maybe a 0.6 will be very strong in terms of explanatory power. Again, there's only so much explanatory power within equities. There's going to be noise. On a time horizon, I think that's also very important, is it's likely this model is going to be looking at 2 to 3 year changes within equities. In other words, it's not going to be able to be predicting equity behavior 3 to 6 months out because there's just too much noise in the short term. And I think that it's more of a trend forecast and understanding when perhaps maybe valuations are stretched or there's the model is really giving strong signals in one direction is likely when this is going to actually be something you can trade upon or try to exploit in terms of the forecast. So there are some limitations to the model that I think will likely be a problem in terms of some of the other other approaches to this. Some of the researchers looked at things like support vector machines as well as tree regression models. So that's something that hopefully I'll be able to explore a little bit more once I get the data worked out to see if that's something. Then there's all this other notion of bringing in other variables and trying to figure out what are the variables might be able to round out and eliminate some of the noise in terms of the equity markets, which there's only going to be so much. But I think that's kind of the next iteration of this if I'm able to get some sort of leading indicator. But that's kind of where that's really the crux of the problem in my mind. I think that the relationship between industrial production and equity markets should persist, albeit not perfect, but it should persist. It's the part of trying to distill down essentially what's moving industrial production before it moves, I think is the real interesting part of this assignment and why I'm excited about it. So that's what the project's going to look like, and I'll start collecting data and start working on this. But hope you guys found it interesting, and I look forward to sharing some results as they come through. Thanks.